So I'm going to say in the first week of November, ETH is going to go to all-time high.
GM, good morning and welcome to the Milk Road Show, the show for people playing the long game, but still checking prices every 5 minutes, which you definitely did all weekend. I'm your host, LG Doucette. It is Monday, October 13th. Ethereum is at $4,125. Thank God. And today's episode is all about if and when it will reach all-time high. We're also going to break down, of course, the events of the last 72 hours, which have been some of the wildest in crypto. And today is a very special panel episode. I am joined by Martin, Kyle, and John from the macro side. And last time I was on with two of these guys, Martin and Kyle, we had a big debate about pump.fun. And I'm very excited to be back on a show with them. I don't think we'll be at odds about this topic, though, as we discuss what's going to happen to ETH. Can it hit all-time highs this year? I think today is a perfect time to discuss this because we have so much to say about the crash from this past weekend, what's going to happen going forward, and why we really believe, I think as a collective, that with the 2.5 months left in the year, ETH is going to get. Today's episode is brought to you by Nexo, the platform that grows your crypto without locking it away, and Figure Markets grow your cash like a bank, no lockups, just real returns. That's enough out of me. Everybody wants to know what the hell happened with this crash. Gentlemen, welcome to the show. Let's get right into it. I want to go straight to the man himself, straight to the big boss, Kyle. Dude, what the heck happened on Friday? What was your initial reaction? Give me how you're feeling right now.
So what's funny is my initial reaction, I was on a plane flying back from Europe to Canada, and I had Wi-Fi. So I was still checking prices every 5 minutes, as I always do. But for whatever reason, I think I was watching a show, or I was actually listening to a podcast, I think it was. So I didn't look for about an hour and a half. And that happened to be the hour and a half that all this stuff happened. And so when I finally looked, I was like, why are prices down so bad? But it wasn't so bad because it had already gone down. Everything went down like 30, 40, 50, some like 90%, and then kind of jumped back up within like 30 minutes. So I saw it after that. And I was like, okay, prices are down bad. Like, what's going on? And I went on Twitter and I was like, what are people talking about? 90% down? Like, what's happening? And I started scrolling, actually looking at the chart, like zooming in. I was like, holy shit. Like some of these things went, like the chart of like Lido or Sky or Atom. It is insane what happened. It all, I mean, most people kind of know already, I think, but there's some, a battle going on with China, as always. Trade wars kind of escalated a little bit. So Trump put out an announcement that they're going to put 100% tariffs on China, and he's not going to meet with them and all this. And so markets puked. This was like Friday, I guess, afternoon or evening, whatever it was. That's since been basically walked back. So on Sunday, he kind of said that, there's not going to be issues and everything's going to be fine. So, prices jumped big time back on Sunday. And now, things look fine. We're kind of back to not where we were last week, but probably where we were maybe 2 weeks ago. But there was some very weird things that happened in crypto. It's interesting. When he made the announcement, the rest of the market was closed. So only crypto was open. And so whenever that happens, and then we make these big announcements, everyone needs to go risk off. And so they can only do it in crypto. And so a lot of people went and sold. And then there was just some issues with exchanges because so much was sold at one time that these shorts just went, and a bunch of people were shorting. And so things went down like crazy. Some of these kind of more illiquid assets went almost to zero. So it was a bit of a weird situation, which I think maybe John can walk us through a little bit further if we want more details on what happened there. He's the wizard on that side. Otherwise, I mean, we're kind of back and things are fine. So I'm not necessarily scared. To me, the one thing I thought, I was like, I can't believe people still sell when Trump does this kind of stuff. Like we just went through this in April and then multiple times over the last few months. Like you got to fade this stuff, guys. Like, what are you doing? And I know like there's institutions and funds and stuff that like they actually trade. And so they try to make money on this, but I think there's no way that they made more money than someone who just bought the dip. Like if you just buy the dip and keep holding this stuff, like you're definitely doing better in my opinion. But anyway, I don't know if we want to get more of the technicals of what happened, but John's got some good insights there.
I want to hear from John. And also I want to say that it's like, if you took the weekend off to touch grass, you came back today, it's just, you're probably thinking about it. Like, here's a nice little dip for me to buy. And you missed all the action. You didn't freak out. But we did, John, you and I did an emergency live session on Friday that went out live on all channels. You guys go check that out. But that might be a little dated now because that was before the actual presser where he announced the 100% tariffs. John, give us your take real quick. What happened there?
Well, yeah, there's a number of things, but I will say that this morning, the spot Bitcoin ETF trading volume passed $1 billion in the first 10 minutes. So I think that that's a sign of market strength. So for people who are, worried or whatever, there's still a lot of demand for these assets. There's still a lot of strength in the market. Yeah, so I think Kyle summarized it pretty well. I think that Trump and Xi are both posturing for a meeting that they're scheduled to have at the end of this month in Korea. So both of them want to go into that in the strongest possible position. So they're both getting a little bit tough. Xi was posturing about limiting exports on rare earth, and Trump has sort of countered, saying like, all right, well then on November 1st we're going to slap 100% additional tariffs on everything from China. But then, like he said on Sunday, he tweeted out, "Don't worry about China, everything will be fine." So we'll see how this all plays out. I think until there's sort of some like grand deal between the two countries, there'll probably still be some uncertainties on this. As far as what happened in crypto, I don't want to get too deep in the weeds on that, but basically what happened was there was some selling that led to some cascading liquidations, and to put it mildly, there was some cascading liquidations. When this happened, I was walking through traffic in Midtown Manhattan and constantly trying to check my phone and stay up to date with our pro community and Discord to update them on what was happening. But yeah, I think the long and the short of it is that a lot of leverage got flushed out. But the buying pressure to push the market back up has been really strong. We're back almost, we're not to $4 trillion market cap yet, but we're getting close. And so I think that, as I said on that live stream, LG, the kind of line in the sand that I was watching for Bitcoin, like the time we were talking, Bitcoin was trading at like $119,000. And I don't think either one of us expected it to drop as much as it did, but I said like the line in the sand for me was 100K, and it didn't breach 100K. So from where I'm sitting, market structure is held, the uptrend is still in place, and I think a few months from now we're just going to look back on this as like a weird hiccup where sort of the plumbing of some centralized exchanges like backed up on them, but overall the market's going to continue and get stronger from here.
Yeah, it was the largest day of liquidations in the history of crypto. I think it was 20 billion or close to 20 billion liquidations, which is pretty wild. But if you look at a lot of the charts of good assets like Bitcoin, ETH, Sol, and a few others, the charts actually still look intact and look all good. There are others kind of, farther down the risk curve, maybe old zombie coins where it doesn't look so great. They didn't really bounce back and have that strength. And so obviously an issue if you were holding any of those, but otherwise, if you're holding the majors or even like good DeFi assets, some of the DeFi assets, so these smaller altcoins had just insane wicks to like prices that you're like, they've never even gone that low before, but they came all the way back. And it's some of these charts are just wild to look at, but otherwise, outside of that big wick, everything actually just looks back intact. So nothing to be too concerned about.
An incredible opportunity for anybody who was at their computer and had the courage to dive in, because some of those DeFi charts got absolutely nuked. Kyle, you're saying earlier that Atom literally went to like almost
zero.
Like literally zero.
And someone had a bid at 1 cent and got it, and it went up 250,000% in like an hour.
Why would you have a bid down there?
I don't know.
Why would you have a bid? Like, I'll put a bid for Bitcoin at $10. Like that
generational bid. Sense. Yeah, crazy.
I want to hear from Martin too, from like a research standpoint. It's like, how do you plan for something like this, right? Because you're looking at this stuff all the time. Is there anything in the stars that suggests that something like that could happen? Is there a way to spot these types of things before there's an announcement? We also saw, actually, sorry, I'll just add a bit of a context. We saw that there was a trader who shorted the market, a few traders who shorted the market in the hours leading up to the announcements, with size as well on Hyperliquid, making a couple $100 million. Martin, was that you? How do you do this kind of stuff? Who's predicting this?
Yeah, I guess maybe some insiders, but I don't really know. But from my perspective, these kind of black swans events, you can't predict them. And if you are an investor, it does, like nothing has really changed fundamentally wise. So like we are all good. The business cycle is intact. So like, I don't know, like I think the best strategy for this weekend is just touch some grass, go out and just be offline and like just ignore the prices movements and the volatility, because that's the best thing you can do. And if you are scared right now, that means that you do not understand the bigger picture that we are playing here. Well, unless you are a trader, we are investors. So like this short-term spike doesn't really mean anything to us. So I'm in the same position as a week ago.
Right. I have a mantra that I've said every day, basically at in our pro Discord, and I tweeted out a lot too. And a lot of people were saying it over the weekend in our Discord, which was majors, spot, zoom out, chill. If you want to be prepared for what just happened, which Martin said, no one knew this was going to happen, but that is it. You hold the majors, you hold them in spot, not in leverage, and then you just zoom out on the chart and you just chill, and that's it. If you just did that, you were completely fine this week. If you were not holding majors, you probably got wrecked on Friday. If you were levered, not holding majors, you definitely got wrecked. And so I just will say it once again: majors, spot, zoom out, chill. That's all you have to do
talking to me?
to succeed in crypto. Yes.
Are you talking to me about the
Chief
levered part? Are you talking to the degen people who got sucked into this perp dex meta for the last 2 months and CZ's convincing us to farm his perp dex and then just comes along and nukes us all? Is that what are you talking about us?
Yeah, exactly.
But no, that's a great mantra, guys, and I think that holds true, and especially in situations like this where it's like this is another tariff positioning thing. It's a black swan, yes, but it's not even something like COVID, where it's like COVID was like, listen, the world might be reshaped here. So we didn't know what was going to happen after COVID because it was such a new thing. Versus this, it's like this is the same old story all year. So that's a really, really great spot. I think it's a great. This is probably a good segue because I think we scheduled this episode so we could talk about ETH going back to all-time high, which would be, what's the exact price? Just below 5K, right? I think it would be like 49.90 or something would be the all-time high if it came back to that, or when it comes back to that, which would be what from here, Kyle? A 18% increase, 19% increase?
Yeah. 18 makes sense, 18 or 19.
That's right. And and before we transition into that, I just wanted to point out in the degen world, on Polymarket, there is currently a 60% chance that ETH will go to 5K by the end of the year. So that's something just to keep in mind, especially zoom out and all this, like you guys are saying that it's like people are spending and that specific market has over $5 million of volume. So a lot of really smart people, including these guys, really believe that ETH, and of course the rest of the market will bounce back, and that ETH has tons of upside. So guys, let's dive into this. I want to kind of go around the table. I mean, Kyle, I want to start with you as you know, probably the biggest Ethereum bull that I know, that you've been banging the drum on this since I've known you, especially my time at Milk Road. What gives you so much conviction right now that ETH is going to get back to previous prices and continue from there through the rest of the year?
John is waiting for me to say something.
Yeah.
The biggest ETH bull is down. Is
Is who?
There, but
is John? John's more of an ETH bull than you.
Well,
okay,
John's
I'm not in your secret meeting. Yeah, I don't know what happened.
I am not a maxi.
Anyway, that's what we call him every week. But no, I mean, I think since April, since the DAT meta came along and we had Joe Lubin and then Tom Lee to follow, launch these DATs, I became super bullish on ETH. I was always bullish on Ethereum, but became a little bit bearish on ETH, the asset, last year. And we actually sold a little bit in our pro, the year previous. And then once Joe Lubin came out, I was like, finally, the demand for the asset is here, because Ethereum has always done so well. And I think, the technology and what they're building there, it's widely accepted. They're innovating like crazy. There's so much happening over there, but there was just never a demand for the token itself. And I think we finally had that happen, and I think it was May when Joe Lubin announced SBET. So that was what really got me bullish this year, and that turned out to be great. But I think when I look at what's going to happen here over the next, let's call it 6 months to a year, I try to compare Ethereum to other blockchains that are out there. And when I think of how is ETH going to move to 5,000 up to 10,000, like wherever we think this thing's going to go, it's a combination of things. We've got ETFs, which obviously have done really well over the last few months, but we're about to get staking. It could happen as early as this month, maybe not now because of the government shutdown, but it's going to happen soon. And so adding staking to the ETH ETFs, I think, is going to be a huge catalyst. Now we're going to get that for Solana as well. Probably just those two will get it, but I think that's a big deal. So I'm excited for that. The DATs, I think, are still just getting started. And when we look at the DATs, there's DATs on, for Ethereum, there's for Bitcoin, there's for Solana, and there's all the way down Hyperliquid and, I don't know, Athena, and there's everything now. But none of them have size like the Ethereum ones have size. None of them have big names like Joe Lubin and Joseph Shalom over on SBET and Tom Lee, et cetera, et cetera. These guys are similar to Bitcoin. They're able to raise every single week or every single month and continuing to buy. And so you haven't really been able to see that on any of the others. They're kind of like one big raise, they buy some, or they just take some like locked up SOL or locked up hype or whatever, and they put it into a DAT and they kind of make it look like, they bought $1 billion worth of it, which they haven't. Whereas ETH has all been actual spot buying pressure. And I think we're only going to continue to get more of that as prices start to move. Obviously, we've been in a sort of downtrend for the last month or two, and so that's slowed down. There hasn't been as much buying, but that always happens. Same with happens in the Bitcoin world too. And so I think as soon as price starts to go back up, they'll get their premiums and they'll be able to start buying a bunch again. And then the last thing that I think really excites me, well, actually, there's two things. One is you have the stamp of approval from things like, BlackRock and from Robinhood, who's building chains and building funds and launching things on Ethereum. There's no other chain that has that today. So you just don't have that stamp of approval from institutions, whereas Ethereum has that. And so I think as institutions continue to allocate into crypto, which they're going to do more and more here, I think Ethereum is going to be their big choice. And then the last thing I will say is you have the stablecoin bill that came out or was approved earlier this year. And then you have the market structure bill that's coming maybe by the end of this year, hopefully. These are massive, massive catalysts for Ethereum specifically, of course, for the whole crypto space. But the stablecoin bill has really allowed anyone to start using stablecoins and launching stablecoins and integrating stablecoins. Most of that happens on Ethereum. And so I think that's a huge catalyst. And then when the market structure bill comes in, it means that a lot of these companies can start to allocate more. They can start to, use DeFi. They can start to do so much more in the space that otherwise they couldn't do. And again, most of them are going to do that on Ethereum. So I just think there's a lot of adoption to come in Ethereum and then a lot of demand on the asset because of the staking ETFs and because of the DAT. So there's just so much to play for Ethereum. And so that's all the things that excite me right now.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow-lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
Do those ETFs continue to raise and buy, or is that, or are they exhausted?
The DATs, you mean?
Point? Oh, sorry. Yeah, sorry. The DATs. Yeah, sorry.
The DATs. Yeah. So a lot of them have exhausted and they're not in premium anymore, so they haven't been able to raise. I think only Bitmine is still in a premium, so they've still been raising and buying. I think SharpLink and some of the others have been less so because they've actually been on a negative premium or a negative NAV, so or a discount to NAV. Sorry. So, but that'll turn, I think, as prices turn. So it's not really a concern.
John unmuted, so I want to hear from John. I feel like he's coming into the ring here.
I mean, I would like to hear from Martin on this, but yeah, so I'll say a couple things. I think Ethereum is well positioned going into Q4. I think that Matt Hogan from Bitwise has been particularly bullish on Solana, but also talking about Ethereum as well. I'll just echo a lot of what Kyle said, but not repeat all of it. Something I will say, though, that he hasn't mentioned is that there's the Fusaka hard fork that's coming up and the Pectra upgrade. These are both technical improvements to Ethereum, which are going to make L2s a little bit more, let's say, better to function and better supported by the network, and it should increase adoption and activity. And I think that once the Clarity Act gets through Congress, which hopefully it will, if Congress decides to not shut down and actually pursue legislation again. The Clarity Act is one of the top items on the agenda. That should be very bullish for Ethereum. And the SEC is working around Clarity for tokenization, which a lot of people think Ethereum is going to benefit from a lot because it'll bring a lot more economic activity into that blockchain ecosystem. And then just the larger macro backdrop, I think, is still generally supportive for risk assets for Bitcoin, for Ethereum. And so I think that's going to continue. I will say about these ETFs though, like the staking element being added is, I think, going to be a big and appealing thing to investors. In Q3 of 2025, there were some periods where the demand for ETH ETPs actually was greater than that of Bitcoin. So I think that the narrative in the market is starting to shift, and I think that'll continue as we get deeper into Q4. So I'm very bullish on Ethereum here. I'm still bullish on Bitcoin, obviously, but I just think that like the current regulatory and macro setup of the market right now is going to be very supportive of Ethereum. And I think that these like technical upgrades to the network are going to help as well. So there's a lot of reasons to be bullish on ETH right now.
Martin, do technical upgrades matter? I remember 3 years ago when the bear started, everybody was so stoked about what did we get?
Merge.
What was the what? The merge. Yeah, the merge.
Biggest
Everybody's like merge. And then it's like the merge happened and the price trickled down. Is this how much do these upgrades matter in your experience?
Well, I think they matter a lot. We just don't index the importance of them much. I think once we see the price going up, then some narratives will catch up. But I think for the people who are really building on top of Ethereum, they need to look ahead, okay? Because there are upgrades now. There will be 2 upgrades per year. And if you are building on top of something and there are new upgrades, and you really need to know like what's the roadmap, where the stuff is heading. Like, are you gonna be still composable, and like is your solution still gonna be able to work with these new upgrades? Those kind of stuff. It's super important, and I think that the recent pivot made by Ethereum Foundation was critical, because until that point, Ethereum community and like pretty much everyone else building on top of Ethereum was sort of lacking the better communication and like focused goals for Ethereum. And like even from technical perspective, having a blockchain in 2025 with 12 seconds block times and like throughput of 18 transactions per second, it just no way, right? So you really need to double down and improve those technical stuff as well. And like, I think if we do not improve Ethereum at all, we just stop here and do nothing. Yes, I think there might still be some, these digital asset treasuries and ETF. There might still be some inflows, but on the longer time horizon, we would struggle to attract like more serious and sophisticated players, because if this technology is not evolving and it's not reacting what's happening in the market, and now we have ZK, we need to change the solidity to something else which is more optimized for zero knowledge proofs, which is amazing technology. So like I think like you need all these pieces together, right? So now we have Wall Street bringing all the public inflows into these assets. We have the same guys doing all the education on Wall Street, pretty much everywhere. Many financial advisors are now allowed to sell crypto and like Bitcoin ETFs, Ethereum ETFs. So that these all things like matter a lot. And then you have like Revolut, Robinhood, Coinbase. Revolut not yet, but they are gonna soon blockchain roadmap pretty soon. I guess it's going to be on Ethereum as well. But the point is, we are just bringing like everyone to build on top of Ethereum. So it's not just that it sort of validates what Ethereum is doing, but it also brings more liquidity and improves the network effects of Ethereum itself. And like once that's happening, it's also bringing more activity on Ethereum. So there's going to be much more fees, a lot of burn, and people love deflationary assets. So like, I think it's all just like putting together, and it's really hard to be bearish on Ethereum at this point.
The other thing I would add is this, and I was talking about this morning with you guys, which is when moments like what happened on Friday happen, there's a lot of people, as Martin said, there's a lot of, financial advisors and other people in the institutional world that are starting to sell crypto, and people are coming into crypto obviously more and more, but we're seeing this sort of like K-shaped, let's call it like performance in crypto assets. You think about like K-shaped economy where you have like rich people keep getting richer because they hold on to assets, whereas poor people or people without money, they keep getting more poor because they don't hold on to assets that appreciate. And one of the things we're seeing in crypto is the good assets continue to go up, Bitcoin, ETH, Sol, Hype, whatever else. Like these things continue to go up over the years. And then there's a lot that just have stayed the same and now are actually just kind of getting lower and lower and lower. These are this kind of like older, let's call it like ghost tokens or ghost chains. And I think what we just saw here on Friday was those kind of shittier old chains that have like large market caps, but no volumes. They got absolutely wiped out. Like they went down like 80-90% and didn't make it back a lot. I think that a lot of people are going to start to understand, I got to stop holding these things, or these are not even worth our attention anymore. And so what are the good ones? And there's only a few. And so that's kind of like more and more happening. I think each time we have one of these kind of like black swan events, hopefully the market gets a little bit smarter. And I think more of that capital gets allocated to these better assets. So I think we're going to continue to see that play out more, which bodes well for Ethereum, obviously. And then the last thing I would say is the one thing that crypto doesn't really have that would allow crypto to grow is there's a lot of institutions that want to or are looking to allocate to crypto, but most institutions don't want to just buy one single asset. They like to buy an index. This is why ETFs are such a big deal, right? They want to buy an index of assets like the S&P 500 or the NASDAQ, et cetera. And we don't really have that in crypto today, at least not in a big way. There's like the Coin 50 and there's like, a few of these other different indices, but none of them are like available on like big public platforms. And you have the S&P 500, which announced last week that they're launching is it the 50, I think, crypto is for 50 tokens or 15, whatever it is, which is a combination of digital assets and crypto equities. But these kind of things are going to come more and more, especially as the regulation improves. And that's when these institutions can start to allocate more and more in size. And a lot of those are going to be market cap based. So of course, Ethereum is going to get the biggest bid out of all that. And so I just think that's when we start to get real true allocation to crypto, is when these indices start to become a bigger thing. And I think that's to play for here in the next maybe 6 months or so. So that's going to bring a lot of capital into the space as well.
So you guys think that all these factors can bring, were all these factors contributors to ETH getting almost to 5K in the last couple months? Like, was it like the DATs buying them up and everything else you mentioned? Like, is that what caused it to get there so far?
I mean, I think the DATs were the big reason why it went up to 5K over the last few months. Like it's very obvious in the charts, this thing was just basically dying until end of April. And then all of a sudden Joe Lubin's like, hey, I'm here to save your bags. I'm going to buy a bunch. And Tom Lee said the same. And now they're running around on, every news channel and every podcast screaming that Ethereum's the greatest thing and they're going to keep buying it. And, the price went from, I don't know, we were down at like 1,400 or something all the way up to 5,000 in a few months. So I think, yeah, absolutely. That was DATs. And then the thing is, it doesn't mean that DATs need to be the only thing to buy moving forward. But the fact that, Ethereum just moved from 1,400 up to 5,000 in a few months. And now everyone's hearing about it everywhere. Now all of a sudden people are looking at it going, holy shit, this thing just moved a lot. And it's a $500 million or $500 billion asset. This is insane. What is this thing? And now when they look at it, they go, oh, Robinhood's building on it and BlackRock has a fund on it. And like they start to understand a little bit more. And so I think this is when you start to see those kind of network effects play out here and more people start to buy it.
So is that something where you expect retail as well, Kyle, or at least retail that isn't in yet? Is that a factor here? Because people always talk about retail. Retail's not here yet for this cycle. They're going to come, but Thanksgiving, they're all going to talk about ETH and Bitcoin and they're going to buy it. Is that something you guys expect to be a factor at all? Or is that even relevant these days?
Let me just answer something and I'll throw it over to you, John, because I know you wanted to say something there. But for ETH, I don't really care about retail at all. It's a $500 billion asset. Retail's not going to move that thing that much anymore. We need big flows. We need institutions. And that's where either the DATs come in who are raising, billions every week, or just, bigger institutional players that are allocating. That's what really matters. Yes, retail can move markets. Obviously, it's a very important part of the market. It's becoming more and more important as we go because there's more and more retail people that are speculating on assets. But I don't think retail is here to an extent, but they're not here like 2021 here. And that's because they just don't have a lot of extra capital right now. They don't have a lot of extra money. If we get these like tariff stimmy checks that Trump has been talking about, I think a lot of them are going to come in and probably punt Bitcoin and ETH and who knows what else, something in the degen world that you handle, LG. But I don't know. But so at some point that'll come, but we need the business cycle to pick up. We need liquidity to pick up. And so I think that's still to come at some point. I just don't know exactly when, but I don't think we necessarily need that for ETH to continue to do well. I think we just need more institutional adoption, which I think is coming for all the reasons that we've talked about here in this episode so far.
John.
Yeah. Sure. Yeah. So something I'll add to that. I've been really kind of like hurt, frustrated, disappointed a little bit about the retail adoption that we've seen in the space. Number one, I think a lot of like really devoted retail investors in digital assets just got wrecked pretty badly on this market downturn. So I feel pretty like, I feel a lot of empathy and pain for them. So everyone, please practice good risk management. Like Kyle was saying before, like don't use leverage; it's not worth it. But there are a lot of the term now that we're using for multi-cycle survivors who just won't drop off are the cockroaches, who are unkillable investors who are very devoted to digital assets. So those people I'm rooting for. I'm one of them. I worked at BlackRock for a while. I left because I wanted to participate more in the retail side of things to try to evangelize a little bit, to be honest, about the values and power of digital assets, of decentralized finance, of why these things matter so much. But the reality is what we're actually seeing is institutions are adopting this technology. They're coming to this technology and to this asset class as an investment much more in mass and much stronger. We saw JP Morgan say that there's a debasement trade that favors gold and Bitcoin in the same sentence, not just gold. And then there's some fringe people who think Bitcoin is good too. They said gold and Bitcoin. Morgan Stanley updated their Global Investment Advisor Committee recommendations to say that they recommend a 2 to 4% allocation to crypto and digital assets. They're far from the last asset manager to make that recommendation, or far from the first, and they won't be the last. I mean, and then I think it was yesterday or Monday, sometime in the last couple of days, Larry Fink was just on 60 Minutes talking about how he was wrong on Bitcoin and how he believes in it as an investment. And then these digital asset treasury companies have not been shaken out either. Just during this recent downturn, Tom Lee's BitMine bought $800 million of Ethereum. So like the institutions are here. They're coming in stronger. They're coming in with more size, more capital. They're all front running this tokenization narrative, which is a real transfer of economic value onto bull rails into digital assets. So my frustration a little bit has been that this is a huge opportunity for retail to get comfy in spot, not take obscene risks, and just front run the largest transfer of capital and a transformation of the way the human species allocates value and our value networks. And a lot of people are missing the opportunity. They're chasing things that are maybe they're going on Aster doing 1001x instead of getting a hold of some of these great assets and putting them to work in DeFi, which is what a lot of these digital asset treasury companies are doing. So that's something that, I've been a little bit disappointed with and frustrated by, but, I do think that at some point, the market conditions will change. There will be a flow of liquidity again that will come into retail's pockets at some level as well, whether it's through a refund check from tariffs or through some other means or mechanism. But then I hope that people take that capital, and instead of treating it like a lottery ticket or a poker chip, they treat it like capital that they're investing, and they find a way to do that in digital assets that makes sense for them. But I don't know. I've been hurting a lot for retail throughout this bull run so far, because I feel like they're getting the short end of the stick and they're missing out on great opportunities.
I was going to say another thing I think that is a big thing for Ethereum, which is to come. I talked about kind of the market structure bill, and Martin and I have talked a ton about DeFi and how we're super bullish on DeFi. And one of the things that like a blockchain needs to do well is apps on it to be doing well. And right now, Ethereum DeFi is doing great, and it proved that it works really well on Friday with all those liquidations. But a lot of companies can't necessarily allocate to these assets yet, even though they're producing a ton of revenue and a ton of profit. But it's because they don't have proper reporting. They don't have proper I don't know what you necessarily call it, but like they don't have good reporting on what they're doing with their tokenomics, what they're doing with the assets that the treasuries hold, when the owners are selling, et cetera. Whereas the TradFi world has that. And so the TradFi world is very efficient and very good in terms of their reporting, and the crypto world sucks. And we need the market structure bill to fix that. And I don't think institutions are really going to allocate to these like smaller DeFi assets or any kind of altcoin asset until we have that stuff. And so that'll come with the market structure bill. And when that comes, I think DeFi is going to get repriced. Aave, Sky, a bunch of these ones that are like legit businesses, they're going to go from $2, $3, $4 billion assets to $10+ billion assets. Kind of like right now, if you look in the stock market, the like lower end, smaller, riskier stuff, it's all around like 10 billion, not 2 billion, but all the like good assets in crypto, but that aren't fully like big yet. They're like 2 billion. Those need to be repriced. And so when that comes, I think that's going to be a really big catalyst for Ethereum as well, because everyone's going to notice, oh my God, there's Sky, which has $80 billion $1 million in revenue on an annualized basis. Like that's huge. So I think that's to come soon. And then the last thing I would say is as rates come down, the yield that you can get on dollars in the TradFi world is going to get worse and worse and worse. And yet in DeFi, it's going to go up and up and up. And so I think in 2026, the big trade is going to be capital coming into crypto to get yield. And that might just be stable coins getting dollars. It might be using DeFi. But either way, that's going to be a massive catalyst for Ethereum, mainly Ethereum DeFi, because it's the only one that's big enough and robust enough for institutions to do this. But that's going to be a huge catalyst for Ethereum as well.
Ooh, I like that last point. I like that a lot. Speaking of different companies and portfolio, I just want to give everybody a quick peek behind the curtain. When you're a pro member, these guys run a fantastic portfolio that they update pretty often in terms of like what they're holding, buying, selling, and that's something that you get notifications for if you're in the Discord, if you are a pro member. Martin, is there, with all this talk right now, with the current dip and even just going into hopefully what should be an incredibly bullish Q4, any major changes to the portfolio? Don't give us the whole update because we got to keep some, just for pro members. But is this a time to add more ETH even to the portfolio or anything else, any of the other DATs?
Well, whatever. Was a lot of assets trading at discount. So if you bought some majors or some good DeFi tokens, like it was a good trade. But like for us and for our portfolio, we didn't do like any big moves or anything. We are not traders, so if there is short-term volatility, we don't do anything, and we didn't have any stable coins. So we were just watching, and we are ready for Q4, and we still think that we are gonna hit like all-time highs pretty much on all our tokens and stocks that we hold. So still Q4 remains super bullish despite the flash crash we saw last Friday.
Excellent. All right, guys, I want to wrap out by doing actual price predictions of what day ETH will hit. We always do predictions. This is the degen in me. We have to do this. Do you guys have anything else to add before we get to that?
No, let's do it.
Okay.
What day it hits all-time highs? That's what you want?
What day it hits all-time high between now and December 31st? And John had to hop off, so we'll have to make one up for John. We'll do one on his behalf. So I've got the chart here and I've got our names. So I'd love to know, Kyle, let's start with you. If you had to pick one day, throw a dart at the wall, what is the day that ETH gets there?
I am going to say that at the end of this month, there's going to be a resolution of the whole China-US thing, because I know Trump and Xi are meeting at some point. I think it's on the 31st. So I'm going to say in the first week of November, ETH is going to go to all-time high.
Okay, first week.
If you want an actual day, let me pull up my calendar and see what exists. Let's go with what's a good one here. Let's go November 6th.
Thursday, November 6th. That is Kyle's horse. We'll put it around the 5K mark, wherever it is around here. Okay, Martin, what is your pick?
I don't have a crystal ball. I have.
Well, no one's going to see you don't get it right, Martin. It's all right.
Yeah,
it's okay.
It can happen like in 1 week and also like in 2 months. Yeah, I also feel like we might go sideways or slightly up in the next 1 or 2 weeks, and then I really think that the market resetted and we are ready for all-time high. So Kyle's like pretty good guess. I don't want to be the same, so I'll be more bearish. So let's say November 20th of November.
Wow.
Thanksgiving.
Super bear.
Is that no? That's not Thanksgiving. That's not the American Thanksgiving. That's a week before, I think. Or is it?
See, wait. My main thinking was we need to have all-time highs before Thanksgiving.
Yeah, totally. Okay, what do you think? What do you think John would say? If we have to encapsulate John? What would we got to summon him? What would he say?
Is he more bullish or more bearish than us right now? I think would say December.
Okay, December. Let's pick a day.
December 8th, because it's my birthday.
That's your birthday? Oh, that's great. We're Sagittarius bros. Okay, and then I'm gonna go. You know what? Let's go proper degen for this one. I'm saying like very soon.
Friday.
I think we're just gonna go buck wild like in a week tomorrow. And guys, and for people listening, this is for fun. Okay, the rest of the episode, that is the deeper insight. This part is like we're doing this part just for fun. Do not take this as financial advice, these predictions. But we do have a nice spread here from October 21st to December 8th is the general team predictions of when ETH will get there.
What's the poly market for all-time high, you said? Can I make more money on that if I buy that?
It's at 60% to hit 5K by December 31st.
So how does that work? If I throw a buck, how much do I make?
So you would make 40 cents on your dollar when it resolved.
So 40%.
Oh, no. Sorry. It would be, you would make like 66%. Sorry, because you'd be buying a share at 60 cents and then you'd be making the additional 40 cents on top of that.
Huh.
So you would make 66% back on your
You can make three times. So if ETH goes all-time highs, you make 3 times what you would make if you just held ETH, if you were to use poly market.
That's it. So Kyle just said sell all your ETH and buy the poly market bet.
Don't do that, guys.
Don't do that part. Don't do that part. Oh boy. All right, gentlemen. This has been fantastic. And like I mentioned, pro members, they get access to all these types of moves, all this type of insight in real time. There's tons of chats in there that were going off this weekend where you can chat with these guys in person, get their signals, get access to all the great data that Martin writes up in newsletters and the pro reports. As well as the pro AMAs that come down, I think every month, every couple of weeks as well. And you get to chat with me, the Degen AMAs. Gentlemen, this has been fantastic. A great day to do it. I think this podcast actually lined up perfectly. I think we had a great, fun, crazy market event to kind of set up a really bullish Q4. So it's been great to chat with you. I honestly learned so much every time I get to talk to you guys. So I appreciate it. And let's hope for a very bullish Q4, very, very quick turnaround from Mr. Trump and all his trade partners to get things back on track. Any last words, gentlemen, before we wrap out?
Stay bullish. Thanks, everyone.
We're sending Kyle Reidhead, our head of research, to the UK's largest Web3 summit. I'm talking about Zebu Live, happening October 21st and 22nd in London. Want to join? Use our code MILK to get 20% off your tickets. Hit the link in the show notes and say hi to Kyle for us. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.